Welcome back, and you're watching Markets at Noon on ET now, and festive season is here, and this time it's a very special Diwali because ये Diwali है Muskan Wali. Let's light up your portfolio also as well this Diwali. And to talk about that, to talk about some more stocks, we have Neeraj Chadawar, the head of fundamental and quantitative research at Axis Securities. Neeraj, thank you so much for joining in with us. Just right before the festive season starts, let's help our viewers talk some more stock and bring some smile on their faces as well. Neeraj, good afternoon.
Thank you for calling me on show. So this year for summer 2080, we started this summer with a note of higher for longer interest rate. And so let me put you in way that what will be the outlook for summer, and then I will talk about the fix. So outlook is very volatile for the global market, but at domestic front the outlook remains bright. India remains the land of stability in the volatile world. We will be the fastest growing economy in the emerging market world. The domestic at a domestic front, corporate earnings remain robust, and on top of that, Indian corporate profitability at all-time high level, and there is a good amount of ROE expansion has been seen in the corporate level. With this, the growing economy, we remain positive on the Indian economy, and that will be the biggest driver for Indian economy and the Indian market for next couple of years. With this, we've brought in the Diwali Muhurat picks for this summer. We believe that there is good amount of opportunity available in the market, given the scenario of the current ongoing state election and the next year union election. The volatility will be the nature of the game for next 12 months. Keeping all this in mind, we come up with a 9 recommendation for Diwali Muhurat picks with a right mix of companies which are in a growth phase with a reasonable valuation, companies with good superior earning visibility, and the right mix of large, mid, and small cap. So I would first talk about my large cap pick.
Right,
So my first large cap pick is HDFC Bank. So we are very confident about the growth momentum for HDFC Bank. This was the underperforming stock from last couple of years, has not beaten the index in a superior margin. But we believe that after the merger, this is a very good amount of opportunity available for the bank to grow sustain its momentum of growth, given the strong customer base, strong distribution network. Along with that, there is the opportunity of cross-selling for the existing HDFC Limited customer. And the valuations are currently very attractive in nature, and we believe that good amount of money can be made in next 1 year. The next pick is from the automobile space, that is the TVS Motor Limited. So we believe that TVS Motor is the fastest growing company in the two-wheeler space. Currently, company holds 20% market share in the EV space, and the ICE engine, they are holding a market share of 16%. So their market share is higher in EV space, and we believe that in next couple of years, companies keep launching new EV space and continue to gain more market share. Along with that, they do export in multiple countries, especially in Middle East and African countries, and over there the demand, we believe that the already bottom we have already seen, going forward demand will likely to pick up. So we've set the target of 2100 for TVS Motor.
Okay, two other stocks that I can see, one in the Diwali picks, firstly Bharti Airtel and APL Apollo. Both have a potential upside of close to 27%. Firstly, for Bharti Airtel, is it the tariff hike that you're expecting that would lead to high growth going forward, or is the subscriber base growth that will lead growth?
So we feel that the entire telecom space is a sweet spot of growth. Right now, the pricing war was the back in the history. Now each and every company is targeting on the profitability. Bharti Airtel, the current ARPU is around 203 rupees, and company is aiming the ARPU of 300 rupees. And there is a good amount of growth opportunity for Bharti Airtel to convert their existing 2G customer into the 3G and 4G and other value-added services which are margin accretive, and this will drive the profitability for Bharti Airtel. We set the target for Bharti Airtel at 755. There is a good upside potential available for Bharti Airtel. Moving to my second stock, that is APL Apollo Tube. So APL Apollo Tube is a company available in the tube steel pipes. Company commands 60% market share in the entire tube market. There is a huge demand coming from the project coming from the railway station, airport. Then company is expanding their touch point also. So there is a huge amount of EBITDA per ton opportunity available for the APL Apollo Tube with the ramping up of their Raipur plant. So going forward, we see there is a good operational, good amount of cash flow generation opportunity in near future, and company will continue to sustain their growth momentum. And we set the target for APL Apollo Tube for 1950 for 1 year target price.
Then there is Jyoti Labs and KPIT Tech. Now, this is a differentiated bet that you're taking KPIT Tech here in the mid-cap space. Firstly, about that.
So, KPIT Tech, we believe that it's the fastest growing IT mid-cap company, and they are ER&D space, and we are very confident on the demand momentum for under the category of ER&D, and company is maintaining their leadership in that ER&D. So the huge amount of opportunity available in that ER&D, so the growth momentum likely to sustain. In Q2 also, the company on a quarter-on-quarter is grown by 9%. Along with that, there is a margin tailwind also there for the KPIT. For next year, from FY23 to 26, we believe that 28 to 29% of CAGR growth possible in KPIT. That's why we are bullish on KPIT, and we recommend investor to invest in KPIT with a target price of 1,500 rupees. The next pick is Jyoti Lab. That is a small cap interesting pick under the FMCG space. Jyoti Lab is currently on the cusp of the transformation in terms of the multi-year growth. We believe that the company has done all the levers to improve their brand presence in the market, along with that their distribution presence. So there are multiple levers available, or the company is doing right thing to improve their distribution network, along with focus on the value-added products, along with the driving the agenda of premiumization. Along with that, they are improving touch points, and they are currently having a 1.1 million touch points, and they're likely to improve that. Further with, they're having a strong sales force of 3,000 people. All in all, this will be improved, and this brings confidence on the visibility of the growth for next 2 to 3 years. We believe that there is a good amount of EPS growth of almost 22 to 25% possible in next 2 to 3 years. And with this, the valuations are very attractive at current level as compared to other FMCG players. So that's why we recommend investor to invest in a Jyoti Lab with a target price of 440 rupees.
Quickly, if you could tell us why Astral, Ahluwalia contracts and SBI Life have made the cut?
So the Astral is into PVC pipe, and we continue to believe in the home improvement demand, and the entire market is shifting from unorganized to organized, and company is gaining market share in that particular PVC pipe category. And we believe and we are confident on the growth momentum in that category, and currently company also increased their guidance for FY24 also, and we believe that this demand momentum likely to sustain for next couple of years. Company at a consolidated level has set a target of 15% volume, 15% top line growth for next 3 to 4 years, and we are confident that given the macroeconomic scenario of higher real estate demand, higher building material demand, and company to continue to gain market share. With this, we set a target of 2150 for Astral Limited, which gives a upside potential of 15 to 18% from the current CMP. The next is Ahluwalia contract. That is my small cap pick for Diwali this year. Ahluwalia contract is a engineering and construction company specialized in art of facility in construction facility to B2B business, especially for hospital, that schools and other business premises. Currently, the order book for Ahluwalia contract is close to 4,500, and over and above, there are multiple order books are in pipeline. Recently, they got an order book of 800 crore from the construction of Max Hospital. Along with that, they are L1 bidder in multiple categories. So with this, we believe that the current order book is more than 5,000 crore. That is one of the biggest order book in the recent time for the Ahluwalia contract. That brings confidence for the revenue growth of more than 20% for next couple of years. And being a asset-light model, good order book in the infrastructure space, we believe that this is a good pick one should have in the portfolio, and we set a target of 770 rupees for Ahluwalia contract. The next is SBI Life. So as I already pointed out that this next year will be we likely to see the volatility in the market. So that's why we put in some amount of defensive bet, the insurance bet, the SBI Life in our recommendation. So SBI Life, we are continuously gaining market share, and the growth momentum is continuously gaining. So we believe that the company will likely to sustain on the growth front, and the valuations, the current valuations are very attractive. One should build a position in SDLI with a target of 1535 for next 1 year.
Thank you, Neeraj, for giving us all those details on Axis Securities' top picks for this Diwali. Moving on, Rajiv Thakkar, the Chief Investment Officer of PPFAS Mutual Fund, finds banking space attractive to invest. He also